Hello, friends. My name is Deepak, and I am with Tax Code Advisors. Today, I'm going to share with you an interesting offer that I got from Home Depot that is giving me 10% off for my next in store or online purchase. And the maximum discount is $200. And the other part of the offer is 24 months of interest free financing and up to 12 months on purchase of 299 up to $1,000 and purchase of interest free for 18 months on purchase of 1,000 to $2,000, and basically for more than for 24 months the purchase has to be more than $2,000. So how do we evaluate an offer like this? And we see that in retail stores. I've seen them when people are trying to buy mattresses, when people are trying to buy computers. Um, Obviously these deals used to be there for bigger purchase items such as cars and maybe a new home purchase. So we used to see stuff like that, but now we're seeing more and more of these offers on consumer products. In matter of fact, I'm starting to see that even with services. For example, there are companies out there who will say, look, Deepak, instead of accepting cash, why don't you tell your clients to pay in monthly installments? I still get paid fully. The company pays me, but the company makes money when you make the installment payments. So there's a big business around financing, and that's what's going on here. And in today's video, I'm going to talk about some of my thoughts as to how one can look at these offers and properly evaluate them. So first thing first, and before we get into whether we should buy it cash, whether we should buy it on credit, let's put everything into dollars terms, because unless we are talking about the same language, then it becomes a little bit hard to communicate. So, here, what's happening is this marketing piece that I received, they're confusing us. Why on one side they have percentages, and on the other side they have a flat number, which is 24 months. So for most people, and I don't really mean to disrespect anyone, but I think most people kind of ignore the fact that we need to be able to convert these two into a common number, which is currency. And if we don't convert them into a common currency, we are not able to evaluate properly if this deal makes sense for us or not. So, for example, 10% of whatever number, let's say if it's $100,000 purchase at Home Depot, what does that really mean? Well, simple math, that would be $10,000. But do they allow us to take $10,000 off? The answer is no. The maximum number they allow us to take is $200. Maximum discount is $200. And so that's it. The maximum value of this offer number one is $200. Second part is up to 24 months financing. So what does that mean? So this is where it's get interesting, because how do you calculate what the interest rate is? Well, it depends who do you borrow the money from. For example, if you're borrowing the money from yourself, maybe you have a CD, maybe you're borrowing it against that. Maybe you have some stocks, maybe you're borrowing against that. Maybe you have life insurance policy, you're borrowing against that. Chances are your borrowing cost going to be very, very low. What's it? Let's say if you borrow against your home, maybe it'll be a little bit higher. If you borrow against a credit card that is giving you some sort of special rate, that would be a little bit higher. And then if you're borrowing against your regular credit card, that might be super high, maybe 20, even almost 30% a year. So that's where it gets tricky. So if you don't have any of those other things available to you, okay, and again, I don't want to get into a conversation of whether you should or not. I just want to kind of focus on how do we evaluate the offer. So whether you should or not, that's a whole different conversation, and we can talk about that in a little bit, at least to keep that as part of the conversation. But that's not the purpose. So if you're, let's just say, if you're able to borrow against something at current prime rate, which I think is probably like 6.5 right now, or maybe you get a little bit discount, maybe around 5%, let's just say. If you borrow against 5% and you did let's say $10,000 purchase, that means you're paying $50 on every thousand, so $500 for 10,000 times two, because it's good for 24 months. So that's $1,000 value. So if you're able to borrow against something at 5%, that is $1,000 value. If you don't have that system in place, which I think everybody should have that system in place. If you don't have a system in place to be able to borrow money for around 5-6%, then that's a whole different financial problem. I think everybody should have that. If you need help with that, definitely reach out to me, and I can help you prepare for those kind of, because that's how you take advantage of things. Um, so anyhow, if you have to borrow it from line of credit from your home, for example, and maybe that is at 7%. So now it's $70 for every $1,000. So that means on a $10,000, that's a $700 times 2, because this is 24 months. That's $1,400 of a value to you now. So which one is better, 200 or 1,400? Obviously, 1,400 will easily win. So 24 months promotion actually makes sense. Similarly, if you take a look at credit cards, if that's the only option you have to do whatever it is that you want to do, then that's a whole different story, because credit cards are typically expensive. Maybe they're 20% or 30%. Let's say 20%. On a $10,000 purchase, that's a $4,000 value that you're getting from this offer. So it's a wonderful offer. So that's how you evaluate. You convert everything into a dollar amount. So I use a $10,000 figure, but maybe for you that figure might be, let's say, $500. So numbers will be quite different, and you need to figure out that math based on what you're doing. But more importantly, what you want to figure out is, what are you going to do with whatever it is that you're going to buy? Is that investment going to grow in value more, or is that money just going to get lost? So what do I mean by that? Because this offer is from Home Depot, let's just say if you were investing in something like solar that is going to increase the value of your home, then this is a wonderful offer, right? You're getting 24 months for free. You're able to add solar. You're going to save on your electric bill. Whatever savings, you can use that to pay back your payments at Home Depot. Works out just fine. If you're going to, maybe it's a rental property and you're planning on adding an additional room or maybe an ADU in the backyard or something like that, and you're generating extra income from there, and you can use that extra income to pay back, again, wonderful offer. So you have to keep in mind, convert everything into a common currency so that way you can evaluate the offer properly. But more importantly, always keep in mind, whatever it is that I'm buying, is that going to increase my cash flow in future or not? If it doesn't increase your cash flow, then I get a little bit worried about that transaction, because that means this money that you'll be paying to this company, that money is never coming back. There's no way for you to make that money back up. So that gets me worried. And then you have to look at the opportunity cost. So let's say if you have a $10,000 purchase that you're making with this company, what if you would have taken that same $10,000 and invested, let's just say, in some broad market index fund, let's say S&P 500 or total market index or something like that. If you would have done that over the next 30 years, that 10,000 will be worth more than $100,000. So hear that? That $10,000 will be worth more than $100,000. So my question to you would be is that worth it? Whatever it is that you're buying, is that going to be worth more than $100,000 in the next 30 years? So that's kind of like how I evaluate the offers. Lastly, sometimes it's not about investment. Sometimes it's for our personal use, for our lifestyle. So if that's the case, then I will add a couple more cents to it. I would say, okay, before I make that purchase, can I possibly convert this purchase into my business purchase? Is that a possibility? Because that allows me to save on taxes right away, because I get to write it off at an expense against my business. So that's my number one strategy. And if you're not able to do that, if I'm not able to write it off against my business, then I will look into, like I said, other ways to pay for the purchase first. For example, can I potentially borrow against something else that I have that had a lower interest rate, but it can still earn higher. For example, maybe I have a life insurance policy or something like that. So that's how I evaluate these offers. If you have any comments, questions, leave it in the comments below, and I'll try to get back to you. Thank you.